Hello, welcome to Accounting Hub. I'm Professor George Scarpin, PhD in accounting, and our topic today is accounting for sales on account. So first of all, the amount a business receives from the sale of an item of merchandise is called the selling price. The amount a business adds to the cost of merchandise to establish the selling price is called markup. For instance, my cost is $100. My selling price is $150. I am adding $50. So this $50 is my markup. An accounts receivable ledger is a subsidiary ledger containing all accounts for charged customers. What do we have? We have here all of my customers, and then accounts receivable ledger, and then we go through general ledger. We go through T accounts and so on. Just like purchase of merchandise, but the opposite. Okay? And then accounts receivable is an asset account. So we increase it on debit, decrease it on credit. So what do we have? So the customer. We create a ledger for each customer where we add our beginning balance if we have it, debits, credits, and then the debit balance because it is an accounts receivable account. So it doesn't make sense to have a credit balance. So here we record the sales and the payments. And then accounts receivable where we combine all of my customers. Date, item, debit, credit, and balance, just like any other account. Okay? And then account name, date, balance, check mark, and so on. And what is a sales tax? A tax on a sale of merchandise or services is called a sales tax. When we go to any grocery store, we purchase a soda. We saw the selling price, $1. When we go to the cashier, it is $1.05, $1.06. This difference is the sales tax. And then a sales journal. What do we have? The account debited, so for whom we are selling it, sales number and the code of this account debited, accounts receivable, sales credit, and sales tax payable. So here is only to record merchandise on account. Merchandise on cash, we don't need it. Because it's cash, we don't need to control who is purchasing. And what is a sale invoice? Just like this one, we have a lot of different sales invoice. So here, quantity, item, description, prices, total, subtotal, and then we add the sales tax. In other countries, the sales tax is embedded on the selling price. Here in the US, it is out of the selling price. And here we add our data and then to whom we are selling it. So how does it work? Let's go to our Excel file. And guys, remember, all our Excel files are free, and the link to download it is in our video description. Also, subscribe to our channel. You will be the first one to know when a new video arrives. So here, transaction 1. We will be doing only transaction 1, and then all other transactions, they are recorded here. Okay? So, because all of them, they are the same. So here, sold merchandise on account to BR Apartments, $764.25, plus sales tax, $47.77, and total, $812. Sales invoice, $498. So the document here is the invoice, $498. So, okay, date, April 4th. Account title here. We can debit accounts receivable or BR Apartments. That's up to us. So, accounts receivable. how much we will receive. We will receive the total. We will collect all of the money. So the debit, A1202. Our credit, sales revenue, or only sales. However, our sales, let's go back to our PowerPoint here. Our sales is the subtotal. Our sale is not the total. So our subtotal here, 764.25. What do we need here to balance this journal entry? Debit, A12, credit, 764. So we need a credit here. So let's link these numbers much prettier. How much we need? 47. What is this credit? Sales, tax, expense? Or not? First of all, we have some problems on sales tax expense. First, expense is a debit account. Remember, expense decreases our equity. Our equity is a credit account, is the source of our money. So if it decreases my equity, it must be a debit. So here, first problem. The second problem, this sales tax here, it is not our money. It is the state money. We are only collecting from customers. We will transfer to the state. We will pay to the state later. It's only to make it easier. Imagine every time we go to the grocery store, we pay the 754 and we mail a check to the state government with the sales tax. It would be boring and very, very hard to control it. So what the state says, business, collect this money. Grocery store, collect this money to me, please, and send me only one check each month. So here, it is a liability. This company, the Scarping Corporation, they are only collecting the money. They need to pay it later to the state. So it is a sales tax payable. It is a liability. So sales tax payable is a liability. Never forget it, guys. Okay? And how do we work on sales journal? So date, April 4th. What is the account credited? We are selling it to BR Apartments. BR Apartments. Sale invoice, $498. How much the account receivable? Debit. Debit record, 812. Sales, 764. Sales tax, 47. And then we go to this one, to the other sales that we have. What else? The BR Apartment. So let's go back to our PowerPoint here. So this is the sales journal. We did it. Now it is here the customer ledger. So let's go. Customer ledger, BR Apartment. What do we have? BR Apartments. This first one here. And item, we can type any items that we are selling it. We are on $498. Our debit, 812. So this is how much we are collecting from them. So this is how much they owe us. Do we have anything here? Yeah, we have a second BR apartment here. So equal April 22nd. What is the invoice? 503. Debit 4,988. So here is our debit numbers. So here is our balance. Okay? And if we receive some money here, we just add it here and then we go on credits. And the last one, accounts receivable. So accounts receivable here. This one, April 4th. BR apartments. And debit, our total debit here. Accounts receivable 812. We have no receivables here. So the total of our balance our green here should match with our accounts receivable here, with our accounts receivable on debit, 21,074. And then, guys, if we combine all of these customer ledgers here, we will get our accounts receivable. However, there is a way to do that without combining a lot of papers, a lot of ledgers. We can do that using Excel. There is a very nice stuff called pivot table. And by the way, we have a video about pivot table in our channel, and the video is in our video description. So, okay, how much do we sold for each of our customers? So first of all, we select here our customers. We can also select the date, no problem. And then pivot table. This is the range for our table. Where do we want this pivot table? Let's not select the new worksheet. Let's select the existing one. We want this pivot table to be posted here. Okay. Oops. Delete. Okay. Now we are good. Okay. So what do we want? We want the account credited on rows. That is our customers. And then, how much is our sales? Values here, sum of sales. Our tax payable. Our accounts receivable. So here we have our sales tax, accounts receivable. They are not in currency format. Select them, currency, and then sales, 19,834, 1,239 sales tax. We combine both, we have our sum of accounts receivable, our debits. So that is a nice way. So our largest Customer here, well, small, and here is in alphabetic order. We can create other orders as well. So I want to do based on sales credit. Right click here, sort largest to smallest. Whoa. More sort options. Sorry. Descending by sales credits. And here. Too fast? I think it was. How do we do that? Select don't need to select it. Here on this arrow, more sort options. Manual, no. Descending from the largest to smallest, from Z to A. Not account credits. We want to do based on sales credits. Sales credit. Okay. Now we have well small, our largest customer, BR Apartments, the second, GES, Jorge Eduardo Scarpin, my last name, my full name. Third, and Mobi Center, C&D Exports, and so on. Nice way to double check your work at least. Okay, guys, so thank you so much. Let me put myself here. Cool. Thank you so much. If questions or comments, just leave it here or email me at jscarpin@gmail.com. Have a very nice day and God bless you.